There is one type of candle that once you understand it, it completely changes how you frame your entries. Not because it's a signal, not because it tells you when to click buy or sell, but because it tells you when the market is incomplete. And when the market is incomplete, price often becomes far more predictable. This video is about that candle, why it matters, and how it can consistently improve your trade quality when you know how to use it properly. This is called the devil's mark. It is essentially when a higher timeframe candle has no wick. To master spotting the devil's mark, we must first understand open low high close and open high low close candle theory. It is how high time frame candles are always created, and it gives us the blueprint for where price wants to go. First, open high low close. This suggests bearish intent, but why? The candle will open greater high to put in the wick of the high time frame candle and then continue lower to put in the low of that candle. Then it will close, creating a bearish candle. Now open low high close. This suggests bullish intent. The candle will open, form a new low, which is the bottom wick of that candle, then continue higher to put in the high of that candle. Then the candle will close, creating a bullish candle. Now we understand open low high close and open high low close theory. How does a devil's mark help us to get high probability entries? Well, what most people never learn is that higher time frame candles give you information before they finish forming, and that information is often far more valuable than the close itself. The devil's mark appears when a higher time frame candle has not formed a wick on one side. That means price has not explored that side of the range during that time window. In simple terms, the auction is incomplete, but this doesn't mean price must immediately move there. It just means that that area has unfinished business, and unfinished business in the market rarely gets ignored. If I ever see a candle with no top wick, I'm expecting price to be a bullish candle because it is currently putting in the low of the open low high close. But if I see a candle with no bottom wick, I'm expecting price to be a bearish candle as it is currently putting in the high of the open high low close. It is extremely simple, but it has so much accuracy, and once you can spot this, it makes trading become far more easy. Let's look at some real chart examples now. Okay, as you can see in this first example, we haven't had a bottom wick of this candle yet. So what we're going to do, we're going to look for a PDRA that aligns with this. We tapped into the first presented 15-minute gap. Now, all we need to do is wait for an entry trigger. That inversion probably was enough, but we would have been stopped out. Was there a gap formed here? Yes. Oops. Okay, so that's an inversion there. And probably take this, to be honest. But that was a very strong inversion, so I wouldn't wait for a retest of it. And then you can simply just target the handle as it doesn't have a wick yet. Very strong draw on liquidity. Let me go ahead and just sell. And then like that. Fairly good trade. And as you can see, we have now put in a bottom wick of this hourly candle. And yeah, it continues to chop around. So let's move on to the next example. Okay, here's another beautiful example. As you can see, we have no bottom wick again, and price has immediately come up and sort of manipulated. So now I'm expecting price is going to come down here and tap into these liquidity pools. And why is that? Because if we go into the 5-minute, you can see we have just inversed this 5-minute gap, and we are currently respecting this 5-minute gap. And additionally, we have an unfilled 15-minute gap down here. And also, if you look at the higher time frame, we're clearly sort of going down with bullish momentum. So all we need to do is wait for an entry trigger. We can take a retest of the inversion and just target a nice 1-to-1 at the unfilled gap. Fairly simple stuff. As you can see, as soon as we did end up putting in this bottom wick, we immediately reversed, but it wasn't enough to break these highs. We do end up going and tapping into this unfilled 15-minute gap. So that's a second example. Let's hop into the third and final example now. Third and final example, this one's going to be a little bit different, and it's going to show how you could potentially get faked out if you didn't know how to spot the devil's mark. Firstly, this looks like a very A+ setup with a 15-minute gap tapped and then the subsequent 5-minute inversion. And we do have draws to the upside. Also, we have rebalanced equilibrium. So this does look like an A++ trade, right? Well, if you look closely, you can see that we clearly have no bottom wick. This gap hasn't gone inversed, and now it has. We haven't put in a bottom wick of this hourly candle yet, so I would never take a trade when I see this, And I recommend you do the same because, as you can see, this does not deliver. It doesn't even break this external high. And that is just due to the fact that we don't have a bottom wick yet. So price delivery is going to be very sloppy. And as you can see, does absolutely nothing and then comes and puts in a bottom wick. And yeah, exactly why you need to be using the devil's mark when you trade. And that is the end of the video. Hope you did enjoy. Like, subscribe, and leave a comment on what concepts you want to see me do next. Thank you, and I'll see you guys in the next one. Peace.